In the month of March, I had more losses than winning trades. But at the end of the month, I came out profitable. This is what the value tells. A total of 14 trades, 8 losses, and 6 wins. In the real world, this is a total failure. But in trading, this has little or no impact, especially if you understand the concept called best losers win. So, how much you make when you are right and how much you lose when you are wrong is what matters. In these 8 trades, a total of minus 8R. That is me averaging 1% risks in every single trade, a total of 8% losses. But then I had asymmetric risk to reward ratio, meaning that I have variable risk to reward target. So in some trades it was a 1 is to 5, in some trade it was a 1 is to 10, in some trade it was a 1 is to 15, in some trade it was a 1 is to 3. So depending on the structure of the market, I am able to capitalize the upward or the downward direction of the market. So 6 trades came out giving me about 34R. At the end of the month of March, I was able to gain a net profit of 24R. So here is the trade recap. Let's dive in. This is the beginning of the month of March, and these are the trades we took. These are the charts. BTC. Most of the pairs traded here are BTC and gold and US oil. So this was a trade we took. This trade also took this trade. And took the trades. And here like I document like how far we've played. Like you can see here, at this point here, you can see so far this week gold minus 1R. So we lost the gold trade, we lost the USD JPY trade, we lost the US oil trade. Those are like 3 losses in a row. So the total loss there is minus 3R in 1 week. And in that same week, we also caught a 1:7R in Bitcoin and another 1:10R in US oil, which equates 17R. And if you do the maths, minus 3R from 17R, that's 14R. So excluding other profits, that trades that I took that I actually shared here, but there's a psychology behind how crypto markets work that I shared that wasn't that I hadn't really shared with the team, but I shared it with them, and but I was able to capitalize on that move. So I made like an extra 6R from Ethereum and an extra 8R from Solana. And by the end of the first week, that was like 14%, which is me risking 1% per trade, and that's like 14R. And so we went on the new week. We tried to buy gold in one of these 2 levels, but gold gold hit our stop loss. You can see stop loss hit, like if you click here, stop loss hit, like for every trade. At this point I was still waiting for gold to trigger. Gold hadn't really triggered yet the way we wanted it to. And see, gold stop loss hit. So when you click that, you see stop loss hits. The gold actually dropped to insane levels that I wasn't expecting it to. I would have just sold the gold. And so like this second week, like I said, this week, 1 week me, like it was really crazy though. I was only able to come out of that week with plus 1R, and this is like a different week entirely. So I explained the strategy of how I caught the Ethereum and Solana trade, and I just shared the insight here so people can maximize the opportunity. And so look at the week. The week we lost that week we lost the 2 buy on gold that I actually wanted to execute. I lost both, and there was like I also took US oil. I lost 1R, and BTC played that well for us, and we made 4R. And if you look at it, we made plus 1R that week, and that was what we came out with. So some trade, like you see, missed minus 1R, plus 4R. That was for the same BTC trade set plus 4R. We sold BTC all the way up there down to 68,000 from 74,000. We sold BTC down to 68,000. Right, so that's for that trade. And okay, so here's what I thought about taking my signals. So I shared this, so I'll pin this while this is happening. So okay, this is from my other account though. So you can see, and this is like a different week. So in total, week last 2 weeks, which is like the first week, and the second week we made plus 1R, but the first week we made 14R. So you see, every week is not the same, and in total we've made 15R in 2 weeks. And so boom. So let's keep seeing what's gonna happen. And I analyzed another trade for BTC. and I was wanting to buy BTC anywhere around 67,000. And I said there are three zones: B and C are stronger execution, but my limit in A stays. So which means that once price gets to the first zone, I'm going to take that trade. And played out. This account flipped like 10k to like 100 and something k, and there's still other positions. Like I don't do this all the time, but I do them once in a while. I even showed withdrawal for this one, and I think is that it about a week. I also put out some trade that actually hasn't triggered though. In this, like the trades that these are more trades, and so I explained how I take my trades and how I play. And every trade that lost, you see, I identify by putting -1 hour. And for the third week, we made I think we made like 2 hour. Yeah, for like the third week in March, we made like 3 hour, 2 hour. So like everything is documented. Plus 4 hour, that's like one trade playing out and two trade losing. And so in 3 weeks, we've made 17 hours. So we'll go again this week. And voila. So I'm doing this because it's the last day of the month of March. So I review all my trades, every single trade, and I don't trade like 50 trades a day or 10 trades a day. Like I could analyze today and the trade either triggers tomorrow or next or today. But most times the frequency are not very high. And so this is another trade that I analyzed for BTC. Okay, and I said we missed the first entry. Like my view was that price would come down to like below 65k more, somewhere around 65,500. The price did not get to that area, and what happened was that price came down to like almost close. Price got to 55,000, 65,000, and shoot up. So what I was saying here is that we missed entry on the BTC execution. The equal low that got swept on the weekly time frame is the new entry. So if you look here, there's a equal low that are annotated there. So that's the new entry. If you look here, the equal low was there, but I did not annotate it because I was seeing it as a tap, and I knew it was going to be a tap. But at this point, I don't see it as a tap anymore. I saw it as an entry order, and that trade played out. Made one is the trade from that trade. See it. That's the trade. Price came back and triggered. So I just closed it, even though the trade is still playing. I just closed it because the month has come to an end, and we made like a clean 1:4 on Ethereum. This is Ethereum. So the price prediction was that Ethereum was going to come down a little bit to somewhere around 1930, 1940, and Ethereum did just that. Came down to like came down to 132, and it smashed our TP, and that was a clean 1:4 up. But so far so good. These are all the trades I took in the month of March. The first week I took 1, 2, 3, 4, 5. You look at it, I was trading 1, 2, 3. I was trading 4 different pairs here, but as the week unfolds, I just reduced the pairs, and I tried to trade US oil. I deleted EUJ. I was like, no UJ for now, because the kind of manipulations that happened the first week of March, I really didn't like that. And for week 2, I removed US oil as we made progress, and gold was just I didn't really catch any gold. Like I knew if I caught gold, I'll make over 20 hour or so, but I didn't catch any gold. It was just whining me, but all good though. So, but by the third week, I just had to keep it aside, and by the fourth week, I just concentrated more on BTC. And if you looked at all the whole months, I was making more on BTC. Week 1 BTC, week 2 BTC, week 3 BTC, week 4 BTC. So BTC hasn't felt like throughout the whole of the month of March, and that's it. And in total, we took 14 trades in this month of March. Out of the 14 trades, 8 of them were losers and 6 were winners. And out of the 6 trades, we made 24 hour. And the concept of how I trade and why I keep trading, whether I make losses whatsoever, is from a book that I read, Best Losers Win, and it just helped me to shape my mindset about the overall samples of trade that I'm going to take is a distribution of wins and losses, and in most cases I'll have more losses than more wins, but all that boils out is how much I make when I'm right and how much I lose when I'm wrong. And that has made me to be consistent and very, very disciplined about my approach, about how I take trades, and I make sure that I don't fall into every shiny stuff out there. I'm so careful about what I trade, and I don't trade too often. I can take 1 trade in a day. I can take maximum of 2 trades in a day. Sometimes in 3 days I only took 1 trade. I haven't even taken some trades. Sometimes in a week I can just take 1 or 2 trades or 3 trades. You see. So if you look at all these assets, say for instance, this is like a full week. Week 2, this is a full week, and these are all the trades I took. In week 2, you can see 1, 2, 3, 4. About 4 trades in week 2. You can see in week 3 they are just 3 trades. You can see it's crazy. And week 1, if you look at week 1, let's assume I only traded BTC. You'll notice it was only wanted throughout the whole of that week. And so that's how crazy it is, because I try as much as possible to focus more on my high probability setup than just want to be involved in the market all the time and just want to trade anything whatsoever that is shiny in the market. So see you in April.